Well, one particular sector that we are looking at due to the strong price action that has been seen as far as the stocks are concerned is the real estate sector. When you're talking about the real estate sector, for a very long time it was said that the real estate sector is down in the dumps, and it was also said that this particular sector is ailing significantly, and only a revival of the realty space would actually aid a recovery as far as the GDP growth is concerned, given the fact that the realty space actually is such a major contributor to the entire GDP of the nation. In fact, the entire realty space was going through multiple headwinds and multiple challenges, given the fact that there were so many changes that the sector had to face. You saw demonetization, you saw the introduction of GST, you saw the introduction of RERA, and also given the fact that the entire construction industry came to a standstill, along with construction as well as sales during COVID-19. These are just few of the challenges that we have enumerated. However, despite all of that, what has been surprising has been the resilience seen as far as demand is concerned from the Indian home buyer, especially when you are looking at the recent sales data, and especially last year when you saw certain states, especially Maharashtra, going in for a stamp duty cut, thereby making the end product slightly less expensive and slightly more affordable as far as residential home buyer was concerned. You saw demand trends improve dramatically. Now, given the fact that most of these stocks have gone up significantly in the last couple of trading sessions, let's have a look at what's actually happening on ground. And this is something that we've taken from multiple management interactions with analysts, with media, and also conference calls that managements have done post their recent earnings. Number one, what's actually been seen is the strong demand. One of the key factors has been affordability of real estate space being at multi-year high, and industry consolidation amongst listed players, ensuring that it is no longer a very oversupplied market. Companies are targeting strong cash flow generation and are aiming to further reduce debt levels. Companies are also aggressively aiming to go up and ramp up on new project acquisitions. One of the most important things, given the fact that we have been lamenting for a while about the very high cost of cement and steel and other raw material prices, select real estate players, large listed players, have been taking price hikes to the tune of 5 to 10%, and the feedback that they have received is that only the large listed players, despite them increasing prices by 5 to 10%, there has been demand absorption that indicates there is scope for further absorption, and realty players can continue to maintain or thereby increase their margin a little bit as well. The top 10 listed companies have improved their balance sheet metrics, with net debt coming in lower by 27% in FY21. Price to book as well as valuation too are quite attractive.